Hey traders, Raghee here. I'm going to teach you a setup that you can use every Wednesday for the EIA crude oil inventories report. It's the same one that I walk the members through each week, and it's probably my favorite use of a tool that I created many years ago called the HPMRs. This is a historical volatility support and resistance indicator, and that's the green and red boxes that are floating across this chart. So this is data from AutoChartist. I create a simple little calculation that projects the highs and lows. I mean, it's insanely simple. And what it does is basically mock out, just sort of imagining out, projecting out what a completed candle for that hour would look like. So I'm doing this on the 1 minute chart. So let me walk you through the setup. And this is the same setup that I alerted members to this morning. In fact, what I'm going to do is show you the same charts that I sent them so you can see how this setup works. All right, so you'll notice here that, oh, actually I need to go to this one. Okay, so before the 10:30 Eastern EIA report, I sent this image out, and it lets the members know that if we move higher or lower, so if we move higher to the resistance or if we move lower to the support, whichever happens first. I call this the first come, first serve setup. And that means that after, this is not going into the event, this is after the release, we look for the volatility to reach one end or the other of exhaustion. Remember, this is price movement, historical price movement based support and resistance. So fast forward, this is what we had right here. Okay, so the market, so look at 10:30, and then what did the market do? It sold off into the support level. All right, so now you have the before and the after of the setup. So let's take you back to the live chart. All right, so we sell off into this area. And so typically what I do is I look for 3 different entries. This is almost always what I'm looking for. I have an aggressive setup, I have a moderate setup, I have a conservative setup. And what I like to do is I like to scale in to these setups. Now, scaling in, it's pretty simple. Imagine a triangle. Your smallest positions at the most aggressive part of the zone, slightly larger at the middle part of the zone, and your largest at the bottom of the zone. So I always use this sort of pyramid or triangle type arrangement. A lot of people do the opposite. What they do is they'll do something like this. They'll put the most number of lots at the riskiest or the level that represents the furthest from the stop, right? I think another thing, so I never recommend this, right? Another thing you can do is sort of pillar, right? Rather than a triangle or a pyramid shape, you can just pillar in. So it's just equal. I'm not a huge fan of that because there is an advantage to being long from here. It's the closest to the stop, right? So what we do is we wait for that after the event, let it sink down into that zone. And this is the way I like to do it. I will have limit orders to buy waiting. That is the way I day trade throughout the day. I place limit orders to buy at aggro, moderate, and conservative levels. That's the way I alert it out to members. That's the way I put it in my own platform. So all we did is, again, first reaction to one end to the other after the event. In this case, it was a buy, and we just ride it up to the opposite end. And that is it. We do this every week on Wednesday with the EIA crude oil inventories. Now, can you do this with non-farm payroll or any other high impact? Yes, but the real requirement, the prerequisite, is that it be a high impact, high volatility event like EIA would be to crude. All right. Okay, so I hope this helps. This is something we do every week. And, think about those exhaustive levels and first come, first serve next Wednesday at 10:30 Eastern. I'll see you in the next update.